Thank you for joining us at xm.com for today's market comment by Harlan Bospisuros. I'm Maria Pachurdes. The US dollar ended Wednesday virtually unchanged against most of the other major currencies, gaining decent ground only against the pound and the franc. The greenback got a strong boost after the ISM non-manufacturing PMI unexpectedly rose to its highest reading since February, confounding expectations of a small decline. With both the new orders and prices sub-indices edging notably higher, market participants added to their Fed hike bets, lifting the probability of a November increase closer to 60% just after the report, and scaling back some basis points worth of rate reductions for next year. That said, with no clear reason, the dollar pulled back later in the day, and the November hike probability retreated to 50%. Yet heading into the upcoming FOMC gathering on September 20th, the U.S. currency may continue gaining ground against most of its major counterparts, as traders seem to have started paying growing attention to economic growth dynamics. Besides the ISM non-manufacturing PMI from the U.S., yesterday Eurodollar traders also had to digest comments from several ECB policymakers who generally agreed that raising borrowing costs next week remains among the options on the table. Yet the market is assigning a 65% probability for no action at next week's gathering, confirming the view that traders are now more concerned about economic performance than high inflation. However, they still see a similar chance for one last quarter-point hike by the end of December. All this adds extra importance to next week's gathering, as a rate increase could give the euro a shot in the arm. Bank of England Governor Andrew Bailey also stepped onto the rostrum yesterday, saying that they are much nearer to ending their own run of rate increases, although borrowing costs might still have further to rise due to stubborn inflation. With the market expecting 2 more quarter-point increases by the BoE, his comments were likely interpreted as dovish, and that's maybe why the pound was among yesterday's main losers. Wall Street ended another day in the red on Wednesday, with the Nasdaq sliding the most. Perhaps this was due to investors lifting their implied Fed rate path after the better-than-expected ISM non-manufacturing PMI. Given that the latest rally on Wall Street was mainly driven by high-growth tech firms, and that those firms are usually valued by discounting expected free cash flows for the quarters and years ahead, their net present values are now under some pressure. Thanks for watching today's market comment here at xm.com.